It's the midweek edition of the program. Thank you for joining us. Welcome to Business Morning. I'm Chimeze Obi Iwa. We kick off from the global oil market as prices rose more than 2% this morning, recouping some of the steep losses from the previous session as major producers prepared to discuss how to respond to the threat of a hit to fuel demand from the Omicron variant. Brent crude futures rose $1.90 to $71.13 a barrel after a 3.9% slump on Tuesday. U.S. West Texas Intermediate crude futures rose $1.71 to $67.89 a barrel after a 5.4% drop on Tuesday. The Organization of the Petroleum Exporting Countries will meet later today and ahead of a meeting on Thursday of OPEC Plus, which groups OPEC with allies including Russia. While some analysts expect OPEC Plus to pause plans to add 400,000 barrels per day of supply in January in light of the potential hit to demand from travel curbs to rein in the spread of the Omicron variant, several OPEC Plus ministers have said there was no need to change course. In a sign of bearish demand, data from the American Petroleum Institute Industry Group showed U.S. crude stocks fell by 747,000 barrels in the week ended November 26, which was a smaller decline than expected. And back here, Vice President Professor Yemi Osinbajo is commending the Nigerian Exchange Limited for using technology to attract young retail investors, especially in Nigeria's thriving financial technology space. The Vice President made the commendation at the maiden edition of the Nigerian Exchange Limited Capital Markets Conference, focused on positioning the capital market towards innovating for Nigeria's sustainable economic recovery. The Vice President reaffirms the federal government's commitment to work with the Nigerian Exchange Limited to ensure investors buy into an enabling business environment. Our State House correspondent, Kayla Megwa, reports.
This maiden edition of the Nigeria Exchange Capital Market Conference is drawing players from all aspects of the capital market and policy makers. Conversations begin with the capital market, creating the enabling environment for the financial technology space.
Without doubt, NGX post-demutualization presents a good platform for addressing many of Nigeria's economic challenges, while these challenges in turn provide opportunities for players in the capital market ecosystem to showcase their potentials and advance business opportunities.
The conference is focused on positioning the capital markets to drive the government's economic growth plan, the private sector agenda, and capital market recovery through policy advocacy. The National Assembly appears prepared to assist in the design of the policies to drive investor confidence in the capital market.
This conference provides an opportunity for us to jointly think through the ways we can improve the policy and legislative process in government to make sure that government facilities, rather than inhibit, allows capital to flow.
According to the National Bureau of Statistics, capital importation was $2.79 billion in the first half of 2021, and foreign portfolio investment accounted for 54.8% of that figure. The Vice President is glad the Nigerian Exchange Limited can focus on its core functions. He commends them for opening to new technological trends.
The second prong of that technology drive, which I understand is being driven by the NGS technology board, is attracting the tech companies, the present and future tech unicorns, to the market as a viable option for raising capital. But we must work gingerly to ensure that where policy may be involved, we enhance and not encumber the ability of these companies to raise capital quickly and efficiently.
As Nigeria takes the long road towards economic recovery, collaborations between the federal government and the capital market are more crucial now than ever. And that's why this conference is holding right now, how the capital market can help the government in the economic recovery plan, especially of the Buhari administration. This particular collaboration is also supposed to look at the infrastructure deficits in the country and see how the capital market can help to bridge this gap. Kayla Megwa, Channels Television News.
And to speak more on some of the conversations at this conference, I'm being joined by the Director, Research and Strategy at Chapel Hill Durham, Tajuddin Ibrahim. Good morning, Mr. Ibrahim. Thank you very much for joining us on the program.
Good morning. Thank you very much for having me.
So the future-ready capital market, innovating for Nigeria's sustainable recovery, that was the theme of this maiden edition of NGS's Capital Market Conference. For you, how apt was this theme at a time like this for Nigeria's economy?
Well, I think it is a good development at a time that the Nigerian economy is out of recession and also trying to find its footing on a stronger economic growth path. Of course, with the support of the relevant authorities, talking about the support from the fiscal authority in this case, and also the support from the monetary side, of the authority. So we expect that this kind of a development should support, a better and a more vibrant capital market going forward, and should at some point, begin to support economic recovery by the time the government and also the corporate, side of the market, make the best use of the capital market to raise capital and also support projects that can drive economic growth to a higher number from the current levels that we are seeing. So I think it is broadly in line, with what we should be experiencing in the current environment.
Now, driving government's economic growth plans using the capital market is one of the key topics that was discussed at this conference. Of course, we know the government is low in revenue and has continued to borrow to fund its budget. What were the key issues that were raised on this particular topic at the conference?
Okay, so at the conference, some governors that were on the panel, talked about the issues around regulators that, the regulators at some point, could sort of slow down the access to, capital, because you have to get approvals at various levels. For instance, for you to, raise debt capital. So some governors, do not find that interesting, and they believe that, there is need for an improvement on that front, so that the regulator is not a hindrance to the ability of states and, other, corporate bodies, to have access to capital on a seamless basis. So in my view, I think, the regulators have a lot of work to do in that regard, to view, the government, whether at the federal level, at the state level, or at any subnational level, to view them as their customers and, treat customers, very well, in a way that they'll be willing to come back and do business with you, because the outcome is not only beneficial to the state or to the subnational government, but it is beneficial to all Nigerians as a whole, and beneficial to the country as a whole. And it also sort of polishes the image of the country externally. So I think, the regulators that are concerned in this case should do some work to address the concerns that have been raised by the governors, in my view.
All right, I guess talking about the regulators, we're looking at Securities and Exchange Commission, the NGX, and of course the Central Bank. Now, some of these stress that the governors are talking about that they undergo, in terms of regulation in assessing funds in the capital market, I believe these regulators were at the summit. They should have responded to this, and I'm sure they were able to also give their own side of the story and what they try to drive out when they bring out some of these regulations.
Well, I think one major thing that, we couldn't have at that conference is what you just spoke to. Earlier in the conference, we had the DG of the Securities and Exchange Commission, giving his speech. But the concerns expressed by the governors, came much later and then, could not be captured, as a form of response. But what I think is one of the key takeaways, from the DG of SEC is that they will do their best to ensure that the capital market is moving forward from a regulation standpoint. And I think they have already heard, from the governors. My expectation will be that, they will address this, and over time, we will see an improvement in the way the Securities and Exchange Commission deal with, their customers in this case being the government of this country, either as the federal or at the subnational level, and also the way they deal with corporate customers to ensure that, transactions scale through without, much delay, and transactions scale through excellently, and customers are happy afterwards.
Now, there were also discussions around increasing retail participation in the capital market. What were these discussions? What are your views on those?
So this discussion around retail participation, I think, was a great one because, we really need more retail investors in the Nigerian capital market for better development. But what is shocking and, not a pleasing development is that we have old investors, in the retail segment of the Nigerian capital market. Currently, according to the central clearing system, the CSCS, they said that the age of an average investor, retail investor in the Nigerian capital market currently is about 53.5 years. That speaks to an old, team or an old, set of, retail investors in this country. And we are in a country where the median age is interestingly low at 18 years. So you ask questions around where are those in their 20s in the market? So there is
may I say something here? Perhaps they're going into the crypto, isn't it?
Yeah, sure. So they are into crypto, they are into other, bitcoins, and that is why there is need, for even the market operators to come up with products that will be appealing to the young generation, and also make the best use of technology to attract the younger ones to invest in the capital market. And also there should be a room, for a review of the regulation, because one of the concerns that was flagged by a retail investor, that was expressed at the conference is that it takes too long for securities to clear. When you buy shares, for instance, it is like T+3, and people, young ones, want their money right now. So there should be a review of that to ensure that, investors get value for their investments as quickly as possible without much delay. We need to review some of our regulations in that regard.
All right. Now, the Vice President talked about the proposed listing of NNPC and how it can enhance the capital market. What are your views?
I think that is a very positive development as expressed by the NNPC and also as reiterated by the Vice President yesterday. I think that would be positive for the market from a from a market capitalization standpoint, because it will add, trillions of naira to, the market capitalization. If it is not the largest listed companies, on the exchange when it is listed, NNPC most likely will be one of the top three, if NNPC is listed. That's one. Two is that I think there should also even be a look beyond NNPC listing. Let us consider some other government-owned enterprises that fit into listing sort of status, and also take the necessary steps around making them public companies, private companies, and also ensure that they get listed over time. Then we'll be talking about having a more vibrant capital market. At the same time, I strongly believe that the exchange should consider low-hanging fruits like having secondary listings where we have primary listings on other exchanges. Good examples are Airtel Africa and Seplat. Those two have their primary listings on the London Stock Exchange, but there is a secondary listing in the Nigerian market, and they have both been supportive of the depth of the market and also the performance as well. So I think these are some of the ways that we can develop the market from a listing perspective.
So MTN Nigeria this morning launched its public offer of share to retail investors. I guess you are monitoring that. How impressive are you?
So I'm very impressed about the development because it speaks to the ability of an average Nigerian to be a part of MTN, for you to not just be a subscriber, it is for you to also have the opportunity to be a shareholder in MTN Nigeria, which is the largest telecoms operator in the country, with well over 67.5 million subscribers. Very strong revenue generation. The revenue for the company grew by 23.6% in the first 9 months of this year. And also we bear in mind the very strong performance of the data business. Everybody in this country needs data. COVID-19 has come to show us that you must have data on your mobile phone to be able to do transactions and to even be able to enjoy your day-to-day activities. More importantly, MTN has been issued a PSB license, which is a payment service bank license, for them to embark on banking activities. This is positive for MTN. So I think investors, generally speaking, should bear in mind that MTN pays 80% of its earnings as dividends. That is substantial, and you will get a yield of well over 10% if you buy into the shares.
Well, I guess by the end of today, we'll see how that IPO performs. In any case, what is the future of IPO in the Nigerian capital market?
I think the future of IPO in the Nigerian capital market is positive, and I think it could be a lot bright and probably brighter if operators in the capital market, are united around, developing and working around, the emergence of more IPOs in the market, because it is from the IPOs and also listing that you get to see more activities in the capital market. But my view is that there is need for us to develop and embrace the relevant technology to ensure that IPOs, when they come to the market, investors can seamlessly buy into those IPOs. But at the same time, we'll talk about private equity, businesses. We have private equity businesses, that invest in private businesses and over time develop them over like a 5-year period, and then they look to list. So in as much as we are seeing effort on that front, I believe that in addition to that, the regulators should also be supportive to ensure that we have more IPOs come into the market. I think the future is bright, but the operators and also the regulators have a lot of work to do for a better IPO activities in the country over the medium to long term.
The future is bright. But a quick one before I let you go. The year is gradually coming to an end. In 2020, the Nigerian stock market was adjudged the best. Are we likely to see that happen this year?
We may not necessarily be the best this year, but I think investors, should bear in mind, some strong fundamentals for some companies, And those strong fundamentals should support decent return this year. While we may not be the best this year, we should most likely be among the top three in the sub-Saharan Africa in terms of return, because currently we are well over 7% on a year-to-date basis in terms of return. It should be a good year in my view.
All right. I'm optimistic as well. Thank you very much, Tajuddin, for your time with us this morning.
Thank you for having me.
After the break, AFEX Commodities Market update is next. Do stay with us. The value, volume, and deals at the AFEX commodities in the week ended November 29 were mostly in the red. But let's bring in Femi Kehinde, structuring and origination analyst at AFEX, to tell us more. Hi, Femi. Good to see you. Good morning. Thank you for joining us. Well, Femi, I can't hear you.
21. For the week, we actually saw a significant decline in the level of activities on the exchange in terms of the value traded, the volume traded, and the number of deals executed. For the value traded, the week actually experienced contracts valued at 1.7 billion naira, which represented a 7.5% decline week on week. For the volume traded, we actually saw a significant decline by 73% week on week, as the execution of 7.4 billion contracts were executed this week. For the number of deals, 136 deals were executed this week, which represented a 58% decline week on week. For the financial market, for the financial benchmarks on the exchange, the AFEX commodity index actually remained flat, remaining unchanged, returning the previous reported week value. However, the AFEX export index increased marginally by 0.05% to close the week at 190 basis points. For commodities traded across, for the trade or the distribution of commodities traded across all the commodities, we actually saw maize, paddy rice, and sorghum accounting for a bulk of the commodities traded this week, with maize accounting for 5.4 million contracts, and paddy rice accounting for 1.1 million contracts, and sorghum 1.04 million contracts. For the prices on the exchange, we actually experienced, sorghum actually had a beautiful week, gaining 8 naira as the commodity surged by 4.12% compared to the previous week to close the week at 211 naira per contract. However, for maize, we actually saw a decline of 5.12% as the commodity closed the week at 175 naira per contract. For paddy rice, we also saw a marginal decline of 0.11% to close the week at 119 naira per contract. However, other prices on the exchange remain the same. This includes cocoa, ginger, cashew, and sesame. For more on our report, you can actually visit our website, which is www.afexnigeria.com, or you can follow us on our social media at afexnigeria.com.
Okay, the month of November has just ended. We're in December now. How has commodities fared generally?
So compared to previous years, we have actually seen the pace at which commodities prices, especially for maize, soybean, paddy rice, and sorghum, actually increase at a faster pace. This is honestly in line with what we've reported in our commodities outlook, which is to say we have fewer commodities compared to last year, but more demand compared to the previous years. So we expect this trend to continue into the festive periods, as we know that more people are in the market in demand for these commodities, and honestly the demand for these commodities really outweighs the supply.
And what is your outlook concerning the effects of the festive periods on commodities prices?
Right, so if you look at the nature of maize and soybean, and you look at what the nature of sorghum, you understand that these commodities would actually be in more demand for this period. Why is that? Because during the festive period, we expect people to increase their consumption of poultry feed, because at the end of the year, we expect families and people, or the demand for chicken and poultry-related items to increase. As a result, we understand that the prices of these commodities will continue to surge upwards into the new year.
All right, thank you very much, Femi, for bringing us up to speed with those trading in the week. In the meantime, food loss continues to be a significant issue in Nigeria for a variety of reasons. Good food value chains are often not well developed in terms of poor production and processing techniques and a lack of technology and infrastructure. Now, these challenges contribute to significant food loss, worsening productivity of the country's agricultural sector. The managing director at AFEX Fair Trade, Mr. Kamaldeen Raji, will talk to us about some of the main causes, constraints, and opportunities for addressing food loss in Nigeria, and also propose some quick wins and solutions. Thank you very much, Mr. Kamaldeen, for joining us on the program.
Thank you for having me. Good morning.
Good morning. So one of the primary reasons of food losses has been recognized as lack of high-quality inputs, talking about seeds and fertilizers. How do you think this has impacted our level of production and the post-harvest shelf life of commodities?
First, let us start with our last survey, which shows that there's a significant increase in adoption rates and application of fertilizer and seed. But generally, from all journals of extension and agronomy, we've seen that a lot of our farmers will prefer to use grains in place of certified seed, and that is really affecting production and output. The truth is this, we need to put a concerted effort towards seeing that whatever we are producing in Nigeria is matching up with what we consume. Today, production is on the increase empirically, but it is so obvious that what we consume as a nation, as a growing nation, with a good number of increase, a good percentage of increase in the population is still low, and that is a problem. We are fighting the food security very well, but we need to start another battle, which is the nutrition security. That is, we need to at least bring to the table a balanced food sheet that shows to the world and everybody how best we can do what we are doing better. And that simply means that there needs to be a concerted effort from both the private and the public sectors. That is, construction, making sure that infrastructural amenities are in place. And that is ensuring that there are enough warehouse construction around the key primary producing areas, and there are silo construction across the other side of the processing side, which we have a very good impact on the cost of production. So this, with all this, we need to fight the battle well and be able to sensitize the farmers, take extension to them, to wherever we find them, start with the farmers, ensuring adoption is higher, and ensuring that they adhere to good agronomic practice.
Now, poor handling and storage of commodities after harvesting is aggravated by the constraints of small farmers, lack of access to credit facility, now which results in food losses. In what ways do you think these obstacles can be overcome?
These are problems, and it's a age-long problem as far as agriculture is concerned. Our people are very conservative. When I say people, our farmers, they are very conservative. They hardly adopt new practices. You know, before now, we have barns, and we have our rooftop where our forebearers used to keep their harvest. And today, a farmer that is using a viable seed and getting up to like 2, 3, 4 tons from an hectare of maize cannot keep it on his roof. So we need to start siting warehouses closer to keep primary production areas. We all need to do a very robust analysis of where are the the production areas and where are the processing areas, so that we can balance this out. So as soon as AFEX is done, we need to take extension to them. That's key education on post-harvest handling and what should be done to reduce some infestation and how to best store in probably a public, a private owner warehouses where they can pay as little as possible to be able to get the same weight, the same quality across the year. And this needs to come with a lot of education. We need to increase the number of extension to farmers. Presently in the AFEX, we do like one extension to 400, which is the lowest you can see across Nigeria now, because you hardly see one extension with less than 4,000 or 5,000 farmers. And we need to do more on extension officers, get more people to do that, and get the right education to the farmer. Handling is very important, and we need to work very hard on it. And this simply means that we need to involve ourselves in a pictorial display of what should be done and when what steps should be taken. And this needs to be very, very well driven by national policy. If not, all the effort might just go down the drain.
Now, adoption of technological efforts in agriculture, such as blockchain, artificial intelligence, and drones, has the potential, to reduce food losses and also attract more Nigerian youths to engage in and assume responsibility for agriculture. However, what are the direct approaches to enhancing technological efforts in Nigeria's agriculture space?
I think, thank you for that question. The best solution or the best approach is still the extension rate. The extension rate, and if we continue that way, we know the adoption rate will still be lower. It's slow and low, but steadily we should get there. The use of AI, blockchain and others, even the adoption of zero tillage is still having a big impact on our farmers. Out of 100, you hardly see up to 5 adopting that, and that's a big one. If you can reduce man time on the farmland using drone to spray, to apply fertilizer, using drone to apply water during holidays, and during the dry season using as well as some irrigation system, will really impact on our production cycle. And the best approach is if we can reduce the number of farmers to extension officer. That is, if everybody adopt that rate and make sure that there is continuous engagement with farmers so that we can check and we can check the adoption rate. Another thing is that we need to start citing trial plots, trial and demo very close to core primary production. We should not put all efforts in one basket. That is, we need to spread it thin and make sure that it moves around the core producing areas. Everybody's looking at one direction, and we can see today that the rate of adoption from that very particular direction is moving high, but other places are not. And if you take one out of like over 10,000 communities that are farming year in, year out, then it means we are just dropping a very small piece of water, drop of water rather, in an ocean. We need to spread out, take the evangelism to everybody, and make sure that, okay, if you get to use this is what you get at the end of the day. It's like you adopting a viable seed today and say, okay, instead of getting 12, 16 bags, you now get like 60 bags. Nobody will ever hear of that and will not be able to adopt. We need to take the gospel to them to make them understand the reasons behind all this and and why we need to start moving up the chain.
Now, what can private market players like AFEX do to reduce food losses in the country? It
will not be out of place if I say that AFEX is doing very well in this aspect, and I'm very sure that we need to start encouraging some other active private sectors to adopt the same. One is today we have a lot of technology like the workbench, COMEX and everything, and you don't need to be a primary producer before you partake in agriculture. And if you are a village farmer located in a rural area, since you can access to your phone and you can make calls, you can get price updates, you can do some other things. We have warehouses well sited closely to the core producing areas, but you know that AFEX cannot solve all the problem across all the value chains in agriculture. But we are selecting some key areas where we think it is very necessary to start working on. Everybody knows today that apart from rice, maize is the next thing. And what are we doing about maize and paddy rice farmers? Then what do we do about soybeans? We need to make sure that they can access a market at the right time. They have right to the best price ever. They can bridge the gap between the processors and themselves, the smallholder farmers. They know what the processor is doing and what they need, and that will really help them in producing what the LPO is saying from any processor today. So from AFEX, we are doing everything possible technology-wise and making sure that the adoption rate to make a better Nigeria agriculture-wise is done and being adopted well.
All right, thank you very much, Mr. Kamaldeen Raju. We do appreciate your time. Enjoy the rest of the day.
Thank you so much.
Okay, we have Anita now to bring us up to speed with the equities market and, of course, the fixed income market. Anita.
Yes, good morning, Jimmy.
Good morning.
Okay, yeah, it's a new month, a new middle of the week. But, of course, I'm just going to give you a review of what happened yesterday. And then, of course, we will be talking to a fixed income trader to tell us what to expect from the fixed income market the very first day of December. So I'm sure you must be itching to hear that.
Absolutely.
Okay, so let's get started. This is what the fixed income market, the bond segment turned out. It was not really active. To be precise, it was rather quiet. And of course, the average yield there remained unchanged at 11.3%. But take a look at the total number of deals carried out there. It was 20. And then the concentration was mostly on the 27th of March 2050 paper. Of course, we still had a little bit of some sell-off there. But when you move over to the Treasury bills market, it's remained bullish. Of course, that's because average yield there remained unchanged at the short and mid segment. And of course, we had demand for the 317 days to maturity bills at that market segment. But the number of deals there carried out at the FMDQ exchange was just about 9. And then, of course, the concentration was on the 27th of October, 2022. Over to the open market operations bill, concentration there was mostly on the 16th of August, 2022. And number of deals, 3. Not much activity there. It remained flat. Average yield there was just 5.5%, still flattish. Then, of course, for the central bank's special bills, that 29th of November paper, that, of course, is over. So the new concentration would now be in between these two, the 3rd of January 2022 and the 28th of January paper 2022 next year. Total number of deals carried out there was just 2. Now let's move over to the equities market. Of course, it didn't come in line with what we expected it to turn out for the month of November, which just ended a couple of hours ago. Of course, we've lost, within the last 2 days, we've lost about 32 billion, 20 billion on Monday, 12 billion on Tuesday, approximately. So this is how it turned out for the all-share index, but still very much within the 43,000 level, of course, still in the red. But month-to-date, we're still at 2.9%, almost 3%. And then year-to-date, we're still positive, 7.4%. Now, let's take a look at the sectoral counter. Yes, we had profit-taking. Of course, the market was down due to profit-taking on some banking big names, such as GT Bank and Zenith. Of course, they have been in the red for reasons of sell pressure. But, of course, that impact was not reflected here. It's still that counter. Of course, we have 5 tier 1 lenders, so they counter the losses from those 2 other banking behemoths. Insurance sector, of course, that one is always in the green, even though the others turn in the red, but it's always finds its way upwards. Then, of course, in terms of the total activity there, you can see it was in the green. 5.5% is what the volume increase, in contrast to how it ended on Monday. So it just shows you that the market, it responds to sell pressure as well as market information. And speaking about market information, we have MTN, offering to retail investors about 575 million shares to retail investors at 169 naira per share. And of course, that is going to be the first digital retail offer to be carried out via digital platform. Of course, we would be looking out for how that share, which is the NGX's second most capitalized equity, so we'll see how that turns out. The offer is open today, 8 a.m., and will close on December the 14th at 5 p.m. So, of course, we don't know whether investors will be whether retail investors will be scrambling for that share. Of course, that's that share. Anytime MTN sneezes, the market sometimes catches cold. Most of the time, it catches cold. Now, let's move over to the unlisted securities market. It went back in the red. It was positive on Monday, but switched back to negative territory. 0.22% is what it turned out yesterday. Market cap, 6.15%, and it was also negative across board here. Not too much of impressive numbers for that smaller unlisted securities market. So, well, that's just all we have. So we will be looking out for how all the markets come out, start the first trading day of December, which is the last month for 2021. But of course, optimism is always a watchword.
Absolutely. December 1, and I'm sure market players are expecting Santa Claus to come in.
Exactly.
Whether it comes in early or maybe later, we don't know, but we expect Santa Claus this month. Absolutely. Okay, thank you, Anyete. We'll take another break. When we come back, we'll do an opening call to London. Okay, let's bring in Juliana now to give us update from London. Good morning, Juliana. So what's the latest on the Omicron variant in the UK and, of course, the measures being taken to curtail it?
Yeah, good morning, Chimeze. Well, I think the aim of the British government right now is to boost the booster programme, which so far has been going pretty successfully. Over 19 million adults in the UK who have been eligible have received a third dose of vaccination. Yesterday, during a televised address, the Prime Minister set out plans to ensure that by the end of January, all adults in the UK would have had a third vaccine. There were even some suggestions yesterday that the most vulnerable will be receiving a fourth dose of a COVID vaccine. I'm not sure what the World Health Organization will say about that, considering there are still many millions around the world who haven't received a first dose. But I think the aim of this Conservative government has always been to use vaccines as a way of getting ourselves out of this COVID crisis. At the moment, there are no plans to increase restrictions. I'm sure that's going to be a topic of much conversation during Prime Minister's questions, which will take place today at the House of Commons. The Labour Party, led by Sir Keir Starmer, are very keen for the Prime Minister to increase some of these restrictions. I believe they've even suggested that people should work from home. But when asked yesterday during the press briefing whether or not people should cancel their Christmas parties, the Prime Minister said absolutely not. He doesn't want people to do that. He believes that the measures that he's put in place are enough to get us through these pretty difficult winter months. And those comments were doubled down this morning by the Health Secretary, Sajid Javid. At the moment, mask wearing and keeping your hands clean, limiting socialising as much as possible could potentially be the way we can get out of this.
And in another development, TSB Bank is closing a further 70 branches, a quarter of its network. That's another blow to the UK High Street.
Yeah, I would say so. I think if you're watching in the UK or you live in the UK, you would know that it's pretty difficult to get a cash point these days. Before, you would see them on every high street. Now it's very rare that you can get cash out of the wall. And that's because during the pandemic, lots of people were relying on digital banking. Most people use digital banking to do their banking, which is why TSB are making this decision. They'll be closing 70 branches in Q2 next year. They've already closed about 160 branches this year. They're not the only one. Barclays, Halifax, Santander, they've all been closing branches. Unions are not really happy because, of course, once you close branches, those bricks and mortars do contain staff. And what happens to these staff? Do they go in the back end or do they lose their jobs? That's a question lots of these banks are going to have to answer. And then, of course, there are people that do rely on cash. There are vulnerable people, there are elderly, there are people that live in very isolated places across the United Kingdom, and they do need access to cash. So even though this is a sign of the times and this is where we're heading, cash is still a premium and people do like to get their hands on it. How will they if they keep closing down these branches?
Yeah, what they do with their employees is a question to answer. All right, we hope to get more updates from you later in the day. Okay, let's take a peep into the crypto market with Laddie Williams. Laddie, I think I saw green.
Yeah, it is green. It is green. We're having a green morning today with major sell-offs in the past few days now. We see Bitcoin there still struggling, though, to stay above the 58K region. And Ethereum is looking really good this morning at $4,700. The market cap, it's inching up there. It's up 3%. 24-hour volume traded in the total crypto market, $129.50 billion. It's up 15%. And we see Bitcoin dominance there at 40%. Who knows? We might lose that 40 range and maybe get into the 30s. That'll be interesting to see. Maybe we'll have an alt season with that. Price of Bitcoin, $57,000. 24-hour volume traded, $36.21 billion traded in Bitcoin this morning. We see Ethereum there holding strong, up 7.56%. Top of the market cap, looking really good with Solana there. And it's all about metaverse at this point. Metaverse tokens are trending right now. Let's bring in Bjorn Martens there, right there in Spain. Hello, Bjorn.
Hi there, William. Good to see you.
Great to have you, Bjorn. Well, it's all about metaverse right now, and I hear you can now buy virtual land, like you can own land virtually. Is that like building a castle in the sky or something? How does this work?
This is honestly fully correct. It's a whole new space. As you know as well, Facebook has changed their name to Meta. This has been a huge step forward for the metaverse to be accepted by the public. You can see a piece of land in this metaverse lately has been sold for €2.5 million. Just a little plot in the virtual world. So you can really see the demand coming towards this world. But also, this metaverse starts to combine itself with the real world, mixing real estate, blockchain, virtual and real with each other in one. It's a whole new space and very interesting. Last year, a piece of land in Decentraland went for $60. And at the moment, they're being sold for more than 100K each. Interesting space and a lot of money to be made.
Right, and how does it really work? How do you own this land, and how does it appreciate in value?
These pieces of lands are represented by NFTs, and these NFTs can give you the rights of the ownership of this piece of land. And as this metaverse is all controlled by the blockchain, it's unhackable. As we have seen the proven work of Bitcoin, Ethereum, and all other blockchains, it's not hackable. So you really can buy a real virtual space that's kind of fungible, not fungible, as is the only one, a non-fungible token. As well, this metaverse, they're linking it up with the real world. As for example, you have only real estate token. This is a real estate token that has real world assets, but later on will combine the real world assets with the metaverse. So it really gets combined over time like this.
Right, so if I'm trying to get into that space right now, how does that work? What do I look out for?
Yeah, where to look out for. Now, definitely always try, I always try to follow the trend. So for example, when Facebook posts or says we're going to change our name in Meta, you can know for sure something is going to happen. Adidas has partnered, Coinbase has partnered, all different metaverse projects. Where to look out for at the moment on the valued projects, do a lot of good research, but the big ones at the moment are XC Infinity, Decentraland, Engine Coin, and Omni Real Estate Token. The first three are all metaverse, and the fourth one is definitely a real world asset generator that's very interested for the NFT space.
All right, Björn Martins, thank you so much for coming on the program. CEO Passive Income Token. Always great to talk to you.
Thank you very much, William. Next time we're going to talk about some really interesting green blockchain energy.
No problem, no problem. All right, thank you.
Perfect. Thank you very much. See you.
Okay, so looking at the top odds there, we see XRP back above $1 mark. There's up 1.89% this morning, and we see it's double-digit greens and top 5 gainers. It's looking quite good. So, Chimmy, if you're looking to buy a virtual land, virtual land
in the space, how does that improve my investment? I just don't understand that.
It's incredible times we're in right now, Chimmy. So just follow the trend.
So you just visualize
you can
yourself
just,
being in a beautiful place. But I keep wondering, how does that add to my investment? I mean, if I have, is it a sunshed or something?
Yeah, like a mansion.
And then you're able to see yourself in a mansion.
Yeah, when you wear
just
the
enjoy it
augmented reality gadget. So you just go into that space and live a whole new different life.
It doesn't make sense to me. I'm sorry, it doesn't make sense to me.
It's incredible times.
Anyway, I think it's something we'll continue to study and monitor and see how that works. I mean, what I'll be, I guess every other person will want to know, how does that add some money into my pocket? If I have to, put in a huge amount of money to invest in metaverse, is it part of the play to earn?
Well, that is part of the metaverse. You know, the metaverse, you have play to earn, you have real estate, you have art. It's a whole new world. Yes, this is real estate. Land.
But virtually.
Virtual land.
Not just
virtual
owning it physically.
Yes,
so I don't know how I'm going to transfer it to another.
Exactly.
To get back my
and they're selling for incredible amounts, $2 million for virtual land. Crazy.
Well, I don't know where the world is heading to, but we'll see. Thank you, Ladi.
All right.
And that's a wrap on the program. Thank you for watching. Don't forget to join us later in the day at 1:30 p.m. for Business Incorporated for more updates on business, on the world of business. I'm Chimeze Obi Iwagu.